Welcome back, and joining me for a closer look at what's played out on the market scene today is Andrew Padoa from Sasfin Wealth. Andrew, thanks so much for joining us this evening. Now, big news today, U.S. trade court blocking President Trump's reciprocal tariffs. Initially, we saw, a big boost in markets, but we are seeing somewhat of a pullback, especially in Europe, and looking at what futures look like in the morning and what the U.S. markets look like as they begin the day. A bit of a difference. Are there concerns because it's not a done deal as yet? I mean, there is a 10-day deadline. However, the Trump administration has also appealed the ruling.
Yeah. Well, thanks for having me in Taoling, but you're spot on. I think markets got off to a good start today, maybe a little bit carried away. But it's a good reminder for the US president that he can't just act alone on trade policy and that there are legal limits. So at least there is rule of law. However, there are, the White House has said there's a couple of ways around this. So maybe that's why markets have kind of just softened a bit later today. But like you said, we've got 10 days to see what the White House response is. So we'll have to just wait and see.
Now, some relief coming through here at home with the SARB cutting rates by 25 basis points. Andrew, was this a surprise? I mean, we do know that inflation is low or rather below the SARB's 3 to 6% target range. However, we do still have those, global risks at play that the SARB is also assessing.
Yeah, well, the global risk is Trump, I suppose. we
run away from that.
Yeah, we just don't know what he's going to do tomorrow, and I think that's maybe why the MPC has been kind of cautious so far this year. But with inflation at 2.6%, I think we had to do something. So it was unanimous. I'm not surprised we saw a rate cut. It was unanimous for a cut. I think there was even one individual that was pushing for a 50 basis point cut. So I think there's further scope for further rate cuts later this year, but we have to see what Trump does. With him in charge, I would rather err on the side of caution with Trump in charge, but let's see what happens.
Alrighty, let's get into some company news now. Kicking things off with Lewis, and growth in credit sales really benefiting the group with HEPS up 60%. The company also plans to, open at least 20 new traditional retail stores and 20 specialist bed stores in the new financial year. So quite upbeat about their growth trajectory. What have you made of those numbers?
Yeah, you're right, Ntaoling. These were really good results from Lewis. Difficult to fault the numbers. Revenue up basically 14%, margin expansion, returns on equity moving from, I think it was high single digits to mid-teens. What I did notice is that the debtors book is growing faster than revenue. Cash sales only grew at 3.4%, whereas credit sales grew over 12%. So they're stimulating demand through financing. But thankfully, interest rates are coming down. If it wasn't, obviously bad debts may become a problem for the business, but I think they're managing it pretty well.
And I was about to mention that issue around interest rates. We are seeing markets really liking the numbers. That share price up 5.7% at the close. Let's look at Corp. They also delivered quite positive numbers. Earnings there up 60%. That's as some of its turnaround efforts bear fruit. Is this a company you follow?
Not really entirely, but I did see that on the 19th of this month, they did have their trading statements. So the shares have kind of been rallying since then. They had a cracker day today, but they've had a really good, basically 2 weeks. But what drove the strong performance, revenue growth, like you said, was modest, but tight cost control, better margins, lifted profits sharply. It looks like they're kind of managing the kind of the core businesses pretty well, despite only 2% revenue growth. But cash generation was strong, so maybe this is kind of a turning point for the business.
SPAR, in the meantime, warning of a profit knock. The group, has been trying to fix things, its operations, and just ridding itself of some of its international operations. I know up for sale now is SPAR Switzerland and AWG. Just your analysis of that trading update.
Yeah, so it was weaker than expected. With the new management, turning over a new leaf, the disposal of Switzerland was kind of inevitable. The Swiss business generates low returns, and it only really shone during COVID, during the pandemic. So selling the business is likely to improve returns for the group in the medium term. But I think what will be key is to now see what happens going forward. Is the turnaround strategy actually are they executing on it with the Swiss business out the way.
And there seems to be light at the end of the tunnel for Sea Harvest. They expect to report an increase in earnings at the interim stage. The trading update has said that the group is benefiting from improved catch rates and higher prices. This, of course, comes after, they reported one of their worst set of numbers since listing in 2017.
Yeah, they didn't give much away in their trading statement. It was almost one or two lines, one or two sentences, and that was it. Increased due to improved cash rates, efficiency gains, and sale price increases, which is encouraging to see. I think the full results only come out, am I wrong, maybe the 2nd of September. So
yes.
We've got quite a long time to wait before we see the full results. But then we can have a deeper dive into the business.
All right, let's get into your stock pick. Where are you seeing opportunity at the moment?
Sure. So my stock pick is Brookfield Corporation. They're a leading global alternative investment firm based in Canada. They focus on physical assets such as infrastructure, renewable energy, real estate, and private equity. They've got a fantastic long-term track record. Current valuation looks compelling compared to global markets.
All right, Andrew, thanks so much for your time and taking us through trade this evening. That was Sasfin Wealth's Andrew Padoa.